All right, what's going on, guys? In this video, I'm going to show you how I find my bread and butter setups, just dealing with weekly range, looking for liquidity, and using smart money reversals as an entry point. So first things first, let me show you what liquidity is. And all liquidity is just resting orders residing in the market. So any kind of money, stop losses, limit orders, pending orders, buy stops, sell stops, they all tend to reside around relative equal highs and lows. So when we're looking at the market, the first thing that we're trying to look at is there any relative equal highs or lows in the market? These relative equal highs and lows also tend to be looked at as support and resistance zones. So as a retail investor, using this as an example, price came down, found some kind of support, retested support, close of this candle. This is your buy entry signal. And then you'd probably target the high, TP1, maybe go up here. But what smart money is actually doing is they set up these relative equal lows here to build as much liquidity in the market as possible. So now you have everyone's stop losses that took this buy position to go up, and you also have people looking for breakout trades. They have sell stops in place right here. So if price breaks below these relative equal lows, the sell position opens up. So you have multiple versions of liquidity that are resting below here, multiple ways that money will be put in place into the market, whether it's stopping people out or opening up new orders. So smart money created these relative equal lows, brought price up. Retail investors, if this was their take profit, then they would have profited on their position right there. But smart money brought price lower once we hit this high here. So from here, drove price lower and then rated out all this liquidity that was resting below this 0.706 area. So that's pretty much what liquidity is. Hopefully that describes it enough for you guys. If not, there's plenty of videos on YouTube, so you could go ahead and do your own research and due diligence there. Now I'm going to show you what I look for in a weekly range. Now I talk about to my VIP members that, the weekly range is going to place a weekly low or high towards the beginning of the week, and then we're going to see the actual move up until Wednesday evening, Thursday morning. So just looking at weekly range here, we're going to be looking for where the banks are building liquidity, where we're going to find our optimal entry point to find a smart money reversal, and just place our orders virtually. We obviously aren't going to take real positions. We'll just use the trading view little order indicator. So I'm on the replay feature right now. We're going to go ahead and play this candle for candle, and we're going to play out the week and find examples on what positions we could have taken throughout the week. So immediately starting off the week, you could see that we have buy side liquidity setting up right here. Now, this buy side liquidity is valid. We just rated sell side here. So this could be a potential entry point now that we have this engulfing candle. We just want to see the next candle respect. I like to see a strong engulfing candle right next to the previous bearish candle. So this isn't my ideal entry point, but we're going to sit here and watch price and see what happens. But first things first, I'm marking this as BSL, buy side liquidity, and that'll be at 0.70439. We're going to play from here. So see, that wasn't a strong position. Price is rating down a little bit farther. So now let's wait for another strong engulfing candle. It's building up more liquidity there. Now this could be an entry point for us to look at. So we did a final raid on sell side, and we're going to look at this last down close candle before engulfing. So this could be an entry point. Now, the only reason why I wouldn't take this, and I'll show you what my ideal entry zone looks like, but this gives us this bullish engulfing candle. If you mix these two together, came almost like a couple pips from our take profit area. Now, if it came that close to our take profit area and then rejected and shot down, it's also likely that price can move lower from this point. So we're going to ignore this setup and we're going to wait for something with a little bit more confirmation. Let's keep going. See if we could get another raid below here, possibly. Okay, now I like how this one is not as close to the take profit. We have a little bit more range to our buy side liquidity here, and we created an engulfing candle. So I'm going to take our drawing tool, and then from the top of the body on the last down close candle to the top of the engulfing candle, this is going to be our entry range. Now we want to wait for the next candle to make sure it comes down, doesn't go much farther below this body, and rejects pretty quickly. So let's see if that happens. And it didn't happen. So now this is no longer valid. We are not going to take an entry on this position. Building more liquidity. You could see the relative equal highs just forming more and more. At this point, I want these lows rated before I find a valid buy position. I don't like buying anything when price is creating liquidity on both sides. So if we raid below here, then we'll start searching for another buy position. All right, there we go. Price rated below here and created another engulfing. So let's go ahead and draw this out and see if it gives us a good valid entry point for us to take our position. So the high of the candle body to the high of the engulfing candle. Anything in here is a valid buy position as long as price just comes down and rejects off pretty easy. So let's go to the next candle. Boom. So right here, we take our buy position. Stop loss is going to be at the bottom of the last down close candle. Take profit, buy side liquidity. Now, when I'm trading, I actually round this up. So normally my take profit would be 0.705 rather than 0.70439. But just for this example, we're going to do it pip to pip and see how it plays out. So let's hit play. Boom, take profit hit, and that took 6 hours. So in 6 hours, you could have locked in 170% profit on your initial investment. And you could see where the price closed, or the hourly candle closed right at 0.705. Perfect trade. This was on Tuesday. So you're getting the week started right there, 170% locked in. Now let's watch price action again and see if anything else sets up going through the rest of the week. All right, so price is rating sell side. Now, normally I'd be looking to see if there's anything on the upside potential, but price already rated all this liquidity here. So we need something to either create relative equal highs here, or we need price to create relative equal lows around the 0.69964 level. So we're just going to play and see what price has to do, or see what price wants to do. And this is all part of the game. It's patience will always pay in the market. Anytime you rush anything, you're going to more than likely end up blowing an account or losing capital. So it looks like we have a little bit of buy side liquidity setting up here. We might draw that out here in a second. All right, right here, price is leaving sell side liquidity. So we're going to annotate this. Got sell side. And let's annotate this just in case. See if something pops up for a valid entry point. Okay, right here, you could see we're engulfing. We could look for buy positions, but see our buying range way too large of a range. I like everything to be tighter, because ideally what you want is the third candle to come down and just tap the last down close candle block. Okay, so you don't want, it's not a valid entry if you have this whole space as your range, because if you get an entry all the way up here, then your risk to reward is going to be pretty shit, to be honest. You want to make sure you keep a high risk to reward. So it's keep watching what price is doing. Another reason why I wouldn't take a buy position here is I don't like adding positions when I have resting liquidity going against my position. So if we took a buy position here, I wouldn't want to hold this buy position knowing that the sell side liquidity is down here and price has a very high probability of coming down and rating this. Now, that's just gambling at that point, and you're adding a lot more risk to your strategy. So anytime you have any hesitations or second thoughts or something that could go against your position, you're better off most of the time, 80% of the time, just closing or sitting on your hands and waiting to see what price wants to do next. All right, so we're watching price. Okay, we're creating more buy-side liquidity here. So let's annotate that out. This one already rated, but we'll just keep it so we can look at the charts after the end of the day. A lot of liquidity setting up. Now, what we do have is high impact news. This is FOMC. So in this case, any positions that we did have open will be closed out. We aren't looking to hold anything through a high impact news driver. And there we go. Here's the FOMC candle right here. You could see a huge reason why we don't hold anything through high impact news. Pretty much either way that you took a position, you probably would have got stopped out and lost money. But if we look at what price wants to, or what price did on the news driver, this wasn't random. This was the bank setting up the market for after the fact. So this is why you pull your money out leading up to the news driver, and then after the news driver, you reanalyze your charts, and you want to make sure to annotate anything new that formed throughout that. This is a 1 hour candle throughout that 1 hour news driver. As you can see, buy side liquidity set up 0.70564. So this is a potential target for us. We have sell side liquidity right here. The only way we're looking for buys is if this raids and gives us a smart money reversal. Only way that we're looking for sells is if price comes all the way back up here, raids, and gives us a smart money reversal. So let's see what price wants to give us. All right. Looks like price is going to raid sell side. So we're going to let price do its thing. Okay. That's a clean raid. Right now, it's just liquidating all this liquidity that's resting below the 6.99 level, 6.995 and 6.99, just pinning down and taking everyone's stop losses, orders, sell stops, anything that's resting below there. Boom, right there. There's our engulfing candle. You could see it didn't push a crazy amount of distance above the last down close candle. So this is a really good valid candle for us. We're going to draw our range, the top of the down close candle body to the high of the engulfing candle. So anything in here, we're looking for buys. Let's open the next candle. Boom. You can see it just barely pinned down and rejected strong. So we're going to take buy positions here. Stop loss below the candle body. Our take profit is going to be right at buy side liquidity, 350%, 349% to be exact, but just round that up. And then we're going to let this go. As you can see, price is moving super smooth. Take profit hit. This only took 1, 2, 3, 4, 5. Could probably say 6 hours. This took 6 hours. and you have 350% right here, 170% right here. So just doing that, that gives us 500 something percent for the week. If you risk 2%, there's your 10% for the whole week in two positions. Very simple, just looking for liquidity and finding smart money reversals in the market. So hopefully this helped you guys. If you guys have any questions, feel free to reach out at any time. This is a very simple way that you could watch just the market range. You don't have to look back in time. You don't have to look back months, weeks, years. You're simply looking at the weekly open, seeing what the banks are putting in place for you, and taking advantage of opportunity when it presents itself. So very simple. Hopefully this helped you guys out. If you have any questions, like I said, feel free to reach out whenever, and we will have another winning week coming up next week.